What is up, YouTube? This is the Working Investor. In this video, we are going to compare and contrast multiple income-based ETFs that track the S&P 500 and then another bunch of income-based ETFs that track the Nasdaq. And they all have their own strategy to them. And some of their strategies do better in different market environments and some of them do worse. But we're going to do a snapshot in time today, October 25th, pre-market hours, and we're going to look at something called total returns because we talk about total returns all the time. You have to factor in total returns, in my humble opinion. See my disclaimers, in order to have clarity when it comes to income-based ETFs. So let's look at the S&P 500. This is going to be our benchmark. And you see, the reason why I'm choosing 6 months is because a lot of these funds have only been around for around 6 months. So I want to look at a fair comparison. So you see here on the left, the orange, it says price return in the past 6 months, 14.61%. But then the total return is 15.33%. Why is that? Because SPYI does pay a dividend distribution. So this actually factors that in and accounts for the dividend distribution. It is small, but it makes a big difference when we're talking about jumbo jet size dividend distributions. Let's start with XDTE. Now, when you look at XDTE is a round-hill product that does cover calls 0 day to expiration with overnight exposure on the S&P 500, the same index. And I'm going to show you how you guys can find the total return. I'm even going to show you this demonstration. You go to Seeking Alpha. I don't have a subscription, so then you don't have to have a subscription to use this tool. You toggle to the right, click on charting, and then you see here where it says plus select metrics. You press on that. You go to the search box and type in TOT because you're looking for total return. You check the box for total return. You press update chart and look at this magic right here. And we're looking at 6 months. So let's really be fair. So in the 6 months you see here, if you just looked at the price return, you would tell yourself this is horrible. It's performing 2.95% price return versus SPYI, which gave us 14 point some fraction of a percent, a little bit more than 14% return. So it's worse than than SPYI. But then when you factor in total returns on the right, and you factor in the dividends, you finally get to a total return of 16.83%. 16.83% beat SPYI, which had a 6-month total return of 15.33%. This is why the total return gives you clarity when you're using option-based ETFs or high yield dividend ETFs. To save you guys time and for the sake of brevity, I did an entire chart and I just gave you the footnotes to make everything really easy. So we're, like you see here, SPY 15.33, XDTE 16.3. Just so you know, Roundhill beat everybody so far. I'm not saying it's the best fund in the world. I'm not giving you any recommendation or advice. I'm just showing you, presenting you the numbers. Then there's SPYT, which is Defiance. They have one of the families of Defiance. They have basically this 0 day to expiration call credit spreads, and they so far have turned out 13.67%. A lot of people like these very high paying dividends from Roundhill that does the in the money puts like the QDTE, the QQQY, the IWMY. They're attracted to the high dividends, but unfortunately, the numbers that Seeking Alpha shows, and you can look it up yourself, like I showed you, 7.22%. So they basically did maybe around half as good as the best ones up there. You know what I mean? So not that great, so far. I mean, look at the numbers. You tell me. You make your own conclusions. But and it does in the money short puts. In the money short puts in market conditions where where the market is going up, 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 and up constantly day after day after day, they may outperform everybody else. But in market conditions where the market is neutral, or the market's going down, or the market's some days going up and not every day going up, they may not they may underperform, as you can see. The numbers don't lie. Then you have NEOS. NEOS is another cover call ETF. They don't do 0 day to expiration. Last time I checked the prospectus, I don't think I saw that. I think they may do like monthlies, but just have to double check. It's been a while since I looked at their prospectus. But they've returned 12.24%. For whatever reason, I have the impression that, my impression and sentiment of NEOS is that they like to write their calls a little further out of the money to give you some upside capture. I was expecting a higher total return in the past 6 months, but this is the number that I got from Seeking Alpha. Look it up yourself, you'll see. Now we're going to part 2 with the Nasdaq, with the tech sector. The Nasdaq, we'll call this the baseline. We'll call this, pretty much the QQQ was 15.78%. That's our benchmark. That's what we're going to compare everything to. The Round Hill so far 17.72%. They beat, as you can see, bigger number, not by 1%, by 2% so far. Again, but past performance is not indicative of future gains. Please you got to take your own risk, speak to professionals, and you got to come to your own conclusions. QQQT, I did not have enough data. It's been around for only like a couple months, so I'm not even going to put it in there. QQQY, which is we mentioned this is a different family of the Defiance funds that does in the money short puts, 8.03%, better than their S&P 500 counterpart, which we understand because the tech sector has Nasdaq has more volatility, so I'd expect a more premium. And then again, the NEOS product 12.87%. Better than their S&P by 12.24%, but still, relatively, underperformed compared to the other funds based on this Seeking Alpha metric. Maybe there are other metrics out there, but this is the metric that I'm using. I hope you guys enjoy. Again, if I can put one point that you guys can take home is it's good to look at the total returns and put that into consideration, because it gives me clarity. I hope you guys have a wonderful trading day. This is The Working Investor, over and out.